What's going on, everyone? Lelit here. Today we got how to trade cryptocurrency options, and specifically it's going to be dealing with Ethereum as well as Bitcoin. We'll be going over how to sell to open a contract, how to buy to close a contract, as well as rolling over a contract, how that looks like, and we'll be doing all this step by step. This video is good for beginners as there's other videos on the channel of exactly how to sell a call and sell a put. But in this case, what I actually am doing is not just doing the trade specifically only, but also giving commentary throughout the whole process of kind of what are the ins and outs and otherwise. I hope you find good use out of this video, and if any questions, do comment below, happy to answer. Because if I saw a video like this in the beginning of my trading investing journey of exactly how it's done step by step, and more importantly the details / nuances of kind of what is the logic or thought logic around certain decisions, it would have definitely helped me more. So with that, I hope it helps you today. And this platform that we're about to go over, no referral links, affiliate links, etc. So just appreciate you gaining the knowledge and spreading it further and into the future. So you know how it is. But with that, we'll see you on the other side. All right, let's get into it. So we got Bitcoin, we got Ethereum, basically available for trading. There's some USD, and there's some amount in terms of position locked. You got your USD, $200 worth. It was on min. I sold a put for Ethereum, which we're going to actually buy to close right now. And 0.14 in BTC is locked up on contracts that I've sold to open previously. So looking at it over here, you got the price of what Ethereum's trading at, as well as the volatility of Ethereum. And so here specifically, if you see, there's a -1 over here. And so this -1 is one contract that I sold to open in terms of a put at $2,000 and expiring on August 27th. So right here, the bid and the ask is 165 to 200. And if we actually see how much I got for that, if we press here, you get some detail. So premium to date, basically I received $22.90. The contract size is 0.1 Ethereum, so 10% of an Ethereum. And for Bitcoin contracts, the size is 0.01, aka 1% of a Bitcoin. And so I can choose to buy to close, gives you the date over here. And so if I say buy to close, for example, let's say one contract, you can increment the contract price of 10 cents. And so seeing the bid and the ask, let's pay the least that we can since we're buying to close. And this is a new nifty feature I haven't seen before, where basically you're underlying your premium, but they actually give you the premium gain loss. So that's pretty cool. So review buy order, let's see, confirm, close order, receive, check open order for status. So we have open order. So here I'm buying, we're going long, basically buying to close. So 0 of 1, 165, and the bid ask is 165 to 200. So let me change that to closer to a mid price, which is gonna look like around plus 15, 17 and a half bucks. So basically if I say 185, let's say 180. So edit, let me do the same one contract, 180, and then, save edit. Okay. So now we got an open order. So 180. Let's see. For the sake of example, I'll make this order go through so other sections of this video go through smoothly, and that way you actually get the hands-on exactly how it works. So go to edit order, and let's do one contract, and let me just do 200, what the ask is. So save and edit, it should go through instantly. Yeah, okay. So it went through, and so if we look carefully, what did we really do? We bought to close, and then our USD balance here went up by that amount that I basically unlocked. So if you look at the position locked, there's $0 in terms of USD, because that cash is not basically a cash secured put. The cash is not put aside such that it would execute to buy that Ethereum on the expiry date at that strike price. So for context, 0.1 ETH at $2,000, basically $200 is 10% of 2,000, and so that's how we got that number of 200. So 205.35 basically is going to allow me, now we go on to the Bitcoin option side. And so just for clarity, if we look at what do we actually have open, that 0.14 BTC, you got -3 over here, aka 3 sold to open in terms of contracts, and the details are going to be 24th September 2021. And over here, you got 31st December 2021, but instead of a 40K strike, it's 75K strike. And so you have 11 contracts over there. So the reason I did this was basically not that I don't think Bitcoin is not bullish in the long term or in the short term, but basically seeing the fact that, hey, maybe Bitcoin doesn't really go past that all-time high of 63K, around that range. And so there's a concept known as theta decay, which is basically me being able to capture what premium I received initially by selling to open my contract. And so as the underlying asset, aka Bitcoin, falls in price, the contract price also falls. And so because I received a bigger amount up front, I can spend less than a total amount I received to buy to close, in essence pocketing that difference. Now again, let's say I close this, and let's say Bitcoin goes to 50K on the actual expiry date. That's totally fine, because I would have kept all the premium. Now if Bitcoin went to 100K, naturally 75K is what that Bitcoin amount would execute at, and so aka I would basically be leaving money on the table. So coming back over here, basically we got 205 in the account, and so let's open up this one first, so the more upcoming date. So I received 156.30, and so there's details over here on screen. And so if I go to buy to close, and let's say 3 contracts, let's not put too much price increments. So if we see the bid in the ask, 34.50, 3,500, not too big of a bid and ask, net. And so I'm okay seeing a gain basically of $51, and this trade I think was around a month ago. And so if you think about it, $50 divided by premium to date of 156 is roughly 30%, so percent a day. Again, that one a day, the amounts we're talking about are not much, but the concept I want to show also is that if we're talking about thousands or hundreds of thousands or X amount of money, then basically you can see how percent and how much the absolute value of the dollar could be very beneficial and profitable as well. So review the buy order. Let's do it. Confirm this buy. Close order received. Check open orders for status. Open orders. Okay, so 2 of 3 are filled. I'm still waiting on the third one. And so while we wait for the third one, what I'm going to do is we got less cash in the account as we bought to close. And at the same time, I can use that same cash in order to buy to close or do other actions on my December calls that I sold to open. Alright, so if we look back at this open orders, basically nothing's open. Positions BTC, now we're only open with the 75K call for December 31st and 11 contracts. So another thing I want to notice over here is basically USD is 97.4, aka $97.40. And if you look at the BTC that's locked up, it's only 0.11. And so essentially I do have 0.3 or 0.03 BTC in here that could be withdrawn essentially or rolled into a different contract type of area. And so that's actually what we're going to do here now. So now that we have X amount of capital and some more BTC, 0.03 specifically, to be rolled over, let's go over here. So December 31st, 2021. And so I have a 75K strike over here. And if we actually look at the detail of what I received basically, it says 383.75. So roughly around, let's just say $35 per contract on average. And if you look carefully, 31, 35, 36, yeah, so around there. So basically, if you X out and let's see the bid and the ask for this, we're looking at around 20 to 19 and a half. And so mathematically, if I got 35 and then we're paying basically 20, if you look at that $15 difference divided by the 35 that we actually got, it's roughly 40%. And so from there, 1955, 20. So basically, if we want to close this, we can actually try to, but if you do the math, 11 contracts times 1955 is going to be roughly 20 times 11, around $200 or more. And so as you can see, there's less cash in that than that total amount. We also have that 0.03 of BTC, which we can basically sell to open to receive more premium, and then I can play around with the other contracts. So let's do that first. So what I've been targeting is basically the 60K over here, and for December 31st. So if I press the actual options chain, it kind of says like, hey, what's going on? So recent trades, you can kind of see, okay, this is the date, the actual timestamp, how many contracts, and what type of price was actually being executed upon. And so the order book also gives you kind of that high level overview as well, but not exactly recent, but more what's open on the book in terms of orders. And so my trades, if you look, nothing in that actual date or time in previous history, in my personal experience with the platform. So coming over here, let's do 3 contracts, and I am gonna sell long, so we'd receive $90. And so let's do this, sell short, so you can see delta 0.3, implied volatility. And so delta is pretty important for 2 different reasons. So delta will basically either give you the amount the option contract will change due to the underlying asset moving. So another way to put it is, for example, if it was a stock market, $1 for every $1 move in the stock, delta is basically saying that, hey, the option contract would move 30 cents for every dollar. And so similarly with implied volatility, it says a 0.93 over here. And so implied volatility, I'm used to it as a percentage, and when you're trading riskier options, like your AMCs and GameStop of the world, shout out if you're listening to this in 2022 or later, but basically your implied volatility could be above 100%, 150% like this. And so the volatility would impact the option pricing. And so with the option pricing being all over the place, there's an opportunity to make a lot of money as a trader. We can also lose fast. And if you're selling on one side, you will receive some premium, but you could also be leaving some on the table. So from here, we can sell short. And so let's do this. So confirm. All right. So if we look carefully, we have now 3 contracts for December at the 60K strike. And if you look at my premium, basically I have 186 over here in the account. So what we're gonna do is, again, mathematically 20 times 11, roughly $220. We don't have that in USD. So I'm gonna partially do this. And so let me just do 6 contracts for now. And what we're gonna do is, let's see, what's the pricing? 1955 to 20. So if I just do an even 2000, then we're looking at $120 in order to buy these options, aka buy to close, and I'm gonna roll it over, but I'm not really rolling over, I'm switching the strike, but it's the same expiry date. And so doing this specifically is gonna look like this. So we wanna buy long, so confirm. Okay, close in progress, open orders, 0 of 6 at $20. All right, I'm gonna edit this for the same reason as before. So let's save edit, insufficient collateral, please enter, oh, whoops. So 6 contracts, 2020, let's see, save and edit. Okay, no open orders. So that $20 difference, if you divide it by 100 because of the contract size of BTC, we're talking about 20 cents per contract in terms of difference. Now, that may not be a lot or not, but it just depends on what kind of the philosophy or your plan is. For me, I'm okay doing it because of the next steps that I'm gonna do. So from here, basically, we have 5 more contracts that are open here. And again, coming back to BTC, we have 0.08 that's locked up, and then if you look, 0.06 over here on the platform. So what I did here was, now we have 64.85, but we have some available BTC. So what I'm basically going to do is get premium from the 60,000 by selling to open some contracts in terms of BTC that we have in order to close the other ones, and then again to sell to open at that 60K strike. So if I come back over here to the 60K strike, we have 0.06, so let's do 6 contracts. In terms of price, I'm okay getting 3,000 for now, just so the order goes through, but I'm also okay with it just given the platform liquidity. So that's something that I'd like to just put out there, that this platform, as more users come on, there'll be more liquidity in terms of actually getting a price you may want and desire naturally. So I could also do the 6 contracts. I can do, 1 at different prices, and that's great. But in terms of efficiency and otherwise, I'm okay doing it this way. So everybody has their kind of plan, and you should too. So just putting it out there. So 6 contracts, 3K. So the point here is we have 0.06 Bitcoin. So again, let's sell short. And if we do this, we're going to collect 180. So confirm. Okay. So no open orders again. And so if you look at the positions, it looks like this. So we have no more BTC available. We have some cash in the account, but we also have these 5 more contracts to go. So if I do this, go here, 5 contracts, and in terms of price increment, again, let's just make sure it goes through. And this would be to buy to close because we have 5 open because I want to roll it. So if you observe, volatility delta changes as well, depending on the contract and price and expiry, etc. So buy long, so premium paid 101, all right, confirm. So we did it, open orders, there are none. And now we're left here. We got 0.5 BTC, we got 9 contracts over here. And so the final step over here is gonna just be 5 of these. And then, let's see, 34, 55, it's okay. And let's sell to open, sell, and that's it. So now we basically did everything, 14 contracts, that's all of the positions that are here for 60K, December 31st, 2021. And this cash over here, I can basically use this as cash to further kind of change certain kind of dates, or kind of switch around the contracts, aka buying to close them and then selling to open again, just like we kind of did. But overall, this money is cash in the account, which basically can just be wired straight to your bank account. So with that, I hope this video was helpful. I know there was a lot going on in one way, but at the same time, I think that if I was basically in the beginning steps of options or otherwise, I would definitely have benefited by seeing kind of the nuances as well as the ins and outs of what the heck was going on, because in the beginning, this type of layout was definitely confusing for me. And so over time, not just learning how to navigate through it, but more importantly, kind of understanding like, okay, so if we switched, the price from mid-price to maybe just a bid or to the ask, or how that goes, and then seeing how, depending on the platform and liquidity, what are kind of the speed in terms of efficiency of execution of actual certain contracts and items like this. So I just wanted to put this out there because it's almost like a video I would have made for myself back in the day when I kind of started doing everything regarding the stock market, cryptocurrency, options, etc., etc. So with that, thanks for coming to the end.